Answer that best. Arvind Sanger, Managing Partner, Geosphere Capital Management, joins us. Arvind, we have so many questions to ask you about our own markets, which are giving us a daily Diwali, as it were. But first, a market that's closer to you geographically. How do you read the ECB's targeted LTRO? I was just looking at the graph last time when the LTRO was announced around December of 2011. Up to February of 2012, the Indian markets rose by about 500 points. The Nifty rose from 4,900 to about 5,400. This time around, do you think the targeted LTRO, because it is targeted, may not create that kind of an impact? What's the impact for us in the emerging markets?
Well, I mean, I would be hesitant to, remember the backdrop when the last LTRO was announced was a massive global risk-off that had been going on for a few months. We're not in the same backdrop, either in emerging markets or in India or, frankly, in global markets. So the backdrop is not where investors were sitting on their hands, worried about the sky falling. And so I don't think the impact is likely to be as dramatic on a broad-based basis. But the reality is the liquidity is going to find its way somewhere. And this incremental liquidity coming from ECB does help offset at least some of the impact of the U.S. Fed taper, as frankly is the in liquidity being infused by the Japanese central bank. So you've got a couple of taps of liquidity that are that are open or opening in ECB's case, offsetting the tap that is gradually being turned off in the U.S. So the reality is, from a global liquidity standpoint, liquidity is still plentiful. And I think, as you were just playing the comments that El Arian made, I think the real issue is whether it's in Japan or it's in Europe, the economic improvement that we've seen seems to have run out of juice. And all we are left with is the liquidity, hoping that that will somehow transmit into economic growth. And people are looking at the U.S. As an example and hoping it'll follow. And I'll just say one thing about where I think one of the errors may lie is that the U.S., partly because we follow the energy business well, the U.S. coinciding with the Fed liquidity injection starting in 2009 was the shale gas boom in the U.S. Almost no economic commentator talks about the fact that how important a driver of economic growth in the U.S. the shale boom has been, which has very little to do with Fed liquidity injection. So therefore, my concern with the European actions and Japanese actions is the reason that they're less likely to be effective is they have nothing else going on that might give them the illusion that the central bankers providing economic growth, and yet it fails. So where India comes in, and this is a long-winded way of getting to your answer, where India comes in is that India is a country that has something structural that could drive a sustained improvement over the next few quarters that people could feel comfortable that could last for a while. And if that is the case, then liquidity is going to look for homes where it can feel more comfortable, that the growth is more believable, rather than hoping that liquidity will by itself drive growth. And therefore, that being the case, I think the Indian market, I can't say that over the next 3 months it's going to have this big pop, but I think over the next several months and hopefully over the next year plus has underpinnings of both liquidity and fundamentals that should drive robust performance.
Mm. Arvind, hi. Good morning. That's the key question on the street. I mean, we've seen a big rally already. The Sensex is at 25,000. But now there are some positive noises coming in from the government, and most are expecting a sizable pre-budget rally as well. What could the extent be of the rally from now up until the budget in July?
Well, this is becoming tricky to call, but I would say that with the ECB action today and everything else going on, I would have said that 7,500 was kind of where we'd hang out till the pre-budget session. But if we continue to see more and more actions by the government and I don't think, in the budget has become the be-all and end-all in the past. But with the new government and with the budget due, just about a month from today, between now and then, if we continue to get positive other news flow, I think the market could easily, go up 5-7%. So, we could be creeping towards the high 7,000s on the Nifty, if not approaching 8,000. So I would have to say that the market is, frankly, near term exceeding where we thought we'd get to this quickly. But if the government continues to give us some signposts along the way, then I think we could continue to move higher.
So, Arvind, at this stage, what will you buy since everything seems to have gone up since we last spoke?
Well, I would say that, yes, you're absolutely right that everything has gone up. So it becomes more of a bet on, where the economic kind of news is likely to be forthcoming. And I think, whether it's the infrastructure sector where stocks have moved, or the banking sector where stocks have moved, or, the power-related companies where stocks have moved, I still think that if one takes a longer-term perspective, there's room for the stocks to run. So while we're in this hope period, I suspect some of these stocks will continue to perform, whereas as we've seen, the stocks, of the past years outperformers, like the IT names and the pharma names, will continue to lag. And I think the consumer stocks fall somewhere in between. And I think, therefore, we will continue to see, more anything connected to infrastructure, to domestic economy, even real estate stocks have done well. So I think if one applies long-term, fundamental valuations and upside, even the cement stocks, the domestic auto stocks, all of these, one can count on, pretty powerful cyclical recoveries ahead of us. So again, the hope trade can drive all of these sectors, and frankly, it's very hard to pick a hole in any sector while you don't have specifics on the table. And the real test will come after the budget, when we get a clearer, or between now and the budget, and I'm assuming by the budget time we'll get a much clearer picture on what the government's initial priorities are. And then we'll start to see separation, and you could see some sectors underperform at that point, where the government doesn't seem to be taking as aggressive a stance on, and some other sectors where the government turns out to be more aggressive, the stocks could continue to run. But in the next 4 weeks in the hope trade, I think many of these domestic-facing sectors could continue to enjoy a bull run.
It's interesting that you